Let's start with China and what the demand signals are telling us, because you've done some fascinating research entitled "The Red Dragon Turning Green," which is not good for black oil. Right. Is that consistent with China approaching or even hitting peak oil demand?
It really is, right? We are seeing electric vehicle sales in China for the first time outpacing internal combustion engine vehicle sales. So we're at 51 to 49%. This means gasoline demand in China is flatlining. So that's number one. Number two, we are seeing diesel demand also actually down 10% because trucks in China are increasingly moving to liquid natural gas as a source of fuel and relying less and less on diesel. So remember, the two main drivers of demand are gasoline and diesel. These are the pillars of the oil market. So all that we are left with in China is jet fuel demand for flying and petrochemicals. But petrochemicals use effectively feedstock that trades at a discount to the rest of the barrels. So that's the challenge. That we don't have a lot of engines of growth, and we think demand is going to be a couple hundred barrels a day up year on year this year, and maybe a couple hundred barrels a day up next year. So compare that to the 500,000 barrels a day or more that we've seen from China, or the 1.5 million barrels a day of demand growth that we saw last year. Remember, China's driven 50% of the world's demand for oil for 30 years running, and that's dying out.
And that's part of the reason as to why you cut your Brent crude forecast for 2025 to $75, just marginally, nonetheless. But if the Fed is shifting towards a lower rates environment, you would imagine that something has to give with the US dollar. Talk to us about how tight or otherwise that inverse correlation is with the energy markets these days, and whether that potentially could be a positive catalyst.
It could be potentially a catalyst, but actually the correlation between the US dollar and energy prices has really broken down quite a bit. And the main reason is, I think Amos was talking about it earlier, is the US is now a net exporter of energy. Historically, the US dollar and oil were negatively correlated because America was the world's largest importer. Today, China holds that title, and America is net exporting all kinds of things. World's #1 exporter of petroleum products, world's #1 exporter very soon of LNG, liquid natural gas, also exporting crude oil. So the U.S. is exporting a lot of stuff on the energy front, and the correlation is really weakened. However, if the dollar weakens, it will be cheaper for other countries to buy oil in dollar terms. So that over time will have a positive effect on demand. But again, it's much more difficult to calibrate than the day-to-day relationship we used to have before.